Welcome, fellow business brokers. Thanks for joining Let's Chat, the show where we talk to CPAs, lenders, attorneys, some of the best business brokers around the world, where we can learn and we can get better as business brokers ourselves. My name is Jim Parker. I am a business broker for nearly 25 years now. I sell businesses mainly in the gross sales range of 1 million to 10 million. I'm really excited because today we have with us one of my favorite SBA lenders, very talented, very knowledgeable, great all-around person, Tammy Teece. How you doing, Tammy?
Hey, Jim, I'm good. How are you?
Doing great. You ready to talk about SBA lending?
Oh, it's my favorite topic.
Well, can we start off talking a little bit about yourself and your bank?
Yeah, absolutely. So I'm Tammy Roberts. I'm with Live Oak Bank. We are the largest SBA lender by volume across the country. I've been with the bank for just under 5 years, but I've been doing SBA lending for a really long time. I won't tell you how long because then you might guess how old I am. So we're going to skip that part. But yeah, I mean, SBA lending as a whole is such a great program because it affords so many opportunities. So I started off in commercial banking as a relationship manager and a commercial banker, but really took to the SBA program for what it allows and offers to the small business community. And I really have a passion for the small business community. When I was growing up, I always wanted to own my own business and I wanted to own my own bar. And I quickly realized that there is a lot that goes into owning your own business, especially in the bar industry.
Yeah.
And so, you know, I had to do all of the things that business owners have to do, like build a business plan and projections and all of those things. And so when I started doing SBA lending, I thought, this is really all the stuff that I love to do and wanted to do for myself. And the experience that I had gone through, I can really be sympathetic to the process for customers, whether they're building a business, buying a business, or, you know, expanding. And it allowed me to take the passion that I had for wanting to be a business owner and help others. So while it wasn't like exactly what I went to school for, I feel like in so many ways it's so much better.
No, I think you found your niche. Obviously, you're very good at what you do, and you're very successful. So kudos to you, Tammy. So
Thank you.
Okay, so we're the audience here is business brokers, mainly Main Street business brokers, maybe some Upper Main Street business brokers. I think maybe some of our listeners are obviously everybody's familiar with SBA, but some of our listeners may not do as many SBA loans as some of the brokers that you know. So I want to start off with some basics. You know, what's the advantages of SBA lending versus, traditional lending sources?
Well, I think there's so many benefits, but the SBA 7A program provides financing for small businesses to acquire assets, increase working capital, or restructure existing debt. The purpose of the loan program is to provide flexible, financing to small business, whether they're looking to purchase or grow. And it allows owners or, potential buyers also for lower down payments. Typically, if it's a business acquisition loan, the down payment is only 10%, as opposed to the regular conventional process that might be 20 or 30%. So it gives some flexibility there for buyers and sellers to have a better structure loan. It also allows for that buyer to potentially keep more cash in their pocket for things that might come up after the sale. So they have that liquidity post-closing. It allows for a 10-year term on a 10-year amortization, which traditional conventional lending, you'll typically see maybe a 5-year term or at the longest a 7-year term. And sometimes they have balloon payments. There's also no prepayment penalty on any SBA loan that is less than 15 years in term. So that's really nice. We typically see an SBA life of loan about 4 to 5 years before that business owner is looking to transition into a conventional product. So if they don't have that prepayment penalty, that allows them to get into more traditional financing, but it also allows them to have additional SBA runway exposure. And by that, I mean the cap on a 7A loan limit through the SBA is $5 million. So that means a borrower can borrow up to $5 million under the 7A program. Now, when they tend to refinance after a few years, then they open that runway back up. So once you pay that SBA exposure off, then you have that $5 million available to you again. But in the same sense, if you're only buying a business for $2 million and later on you want to buy another business for $2 million, you still have $2 million available because your total is not yet reached that $5 million limit. So it's a pretty nice size limit.
All right, great. You know, you had mentioned that. I'm sorry. I'm so sorry, Tammy. So the SBA lending, you know, for the government, they're looking at it and going, it's a program because it's going through the Small Business Administration, the SBA, and they're looking at it and going, this is a way for the government to help small businesses grow, help small businesses in our country. And it gives a lending type of a situation that makes the banks that are doing the SBA lending motivated to do the loans to help our overall economy. I mean, that's basically the end of the day is to spur business growth, in particular, small business growth.
Yeah. It helps to mitigate the risk for the lenders, which is always, I mean, that's always going to be something that needs to be done. You know, we're risk analysts, right? And so what it does, the program, it guarantees 75% of the loan to the bank in repayment. So it really is just that 25% in the lender's perspective that they're taking risk on, because should there be a default, then the SBA program is going to guarantee repayment of 75% of that loan.
Yeah.
Up to the $5 million. So the 75%. So say you had a $5 million loan. So the guarantee on that would be $3,750,000. So the bank would recoup that, and then they would collect on the remainder through collateral or whatever else. Mm-hmm.
And that 75%, you got the 10% too of the down payment as well. So you're at 85, or no? Am I mistaken? Are you at 85 and it's only exposure of 15, or?
It's 75% of the loan amount. So It would be 75% of whatever the loan.
Okay. Yeah. Well, I learned something new today then, Tammy, because I 35 plus the 10. So I learned something new.
With SBA, I learn something new every day.
Right,
but it almost acts like an insurance policy in some ways. When I'm trying to relate it to someone, I typically relate it to something much like private mortgage insurance. You know, it guarantees or helps to, you know, the lenders to get comfortable on FHA loans and things of that sort, because it offers that insurance to the lender.
All right, great. Well, Tammy, I kind of want to walk through the entire. This is going to be titled SBA 101. So we're getting really just the basics here, but I think the basics are important for brokers that haven't done it before. But also, you know, there's some sellers and some buyers that may be watching this as well, and I don't want them to be familiar with it as well. So I kind of want to walk through the SBA process from beginning to end. Obviously, we're not going to be able to get into great detail about any one sector, but I want to start off with, you know, pre-qualifying a business. You know, I get my businesses pre-qualified for an SBA loan before I market the business for sale. I actually this is a good tip for a broker, by the way. I actually get my businesses pre-qualified for an SBA loan prior to going to the seller and giving them the results of my broker's opinion of value. So I can go to my seller and say, hey, look, this is my broker's opinion of value. This is what I feel we should go to the market at. By the way, I've already got a bank that's backing this up, and, you know, this is their term sheet. So, you know, it helps the seller realize that it's a reasonable price, because, you know, if it doesn't cash flow for the loan, it doesn't cash flow for the loan. So, and that's the last thing you want, is to have a $3 million business that you can't get SBA financing on, because there's not too many buyers out there that are going to pay $3 million, at least individual buyers. So Tammy, let's start off with what do you need? What do you ask for from me or other brokers when you want to pre-qual, or you're going to do a pre-qual for a business?
Yeah. So when we're doing a pre-qualification for a business, typically we'll ask for the last 3 years of tax returns and the year-to-date P&L and balance sheet. In some instances, if it's an industry specific, we might look at the accounts receivable report and accounts payable report to ensure there's no potential customer concentrations that might come up and hinder some of the lending. And then what we do is we do a cash flow analysis based on the current financials and the historical performance of the business to see how much loan the business could support on an annual payment. So to see if, say, you have your $3 million listing, we'll do our cash flow analysis, adding back certain things, much like you would, like current seller compensation, any depreciation or interest or amortization. And then we would see how much the monthly payments would be on a $3 million loan. And we annualize that payment so that we can see what the total annual payment would be in the cash flow, because we're doing the tax returns are based on annual performance. Mm-hmm. And then we can let you know that yes, it does in fact meet the requirement of what they call the debt service coverage. So that's the ability of the business to be able to make the payment on the loan.
And that service coverage, that's after the necessary salary for the buyer, correct?
That is correct. That would be after the new compensation to the buyer. And that, Jim, as you know, that's very specific to whoever your buyer is. Some folks have less need than others. Some folks also have outside income that can be considered as well. So that is typically when I'm doing a cash flow analysis, and all lenders have their own way of doing it. I'll typically use a salary of about $100,000 or right around that range. So when you ask me to pre-qualify a listing, I'm plugging in an average number so that we kind of have a good gauge of a range of buyers, because $100,000 in salary is a nice size salary. So I think that gives us a good pool of buyers. And then we can always talk about if we have some wiggle room, when we do the analysis.
Right. If the buyer needs more or less, then you can adjust it from there. But right now you're just pre-qualifying the business in general so that we can market and say, hey, this has been pre-qualified for an SBA loan, which, by the way, is critical when you're marketing a business or SBA loan. You got to get it pre-qualified, and that goes a long way when you're marketing it. So I want to touch on the ad backs, because you had mentioned about the ad backs. As a business broker, I add back things a certain way, and the add backs is, I'm adding back, things like depreciation, interest expense, owner's compensation, things like that you are. But us brokers tend to add back more than you guys as SBA lenders, correct?
Sometimes, yes. So typically, Jim, when you send me a listing to pre-qual, you'll tell me what you're considering in your analysis. Mm-hmm. And whichever ones I don't know, we can definitely use, like the interest, the depreciation, the amortization. Sometimes we've got the current owner's auto expense that's run through. That might be where we can take a look at invoices that are in a personal name, and we can show that it's been paid through the business. Also, some other things that we look at are pensions. We've been able to successfully document that if we can successfully document that expense is truly tied to the seller, it would not continue, then that's absolutely something that we could add back. I get a lot of questions about health insurance. And the reason I don't typically add that back is that we would make an assumption, and again, just an assumption, that the new owner would also need health insurance. That is not always the case, though. Maybe their spouse has life or health insurance, and they can be added to that policy, in which case we would be able to add that back. So there are some one-off situations where we can add things back that we might not be able to add back in every loan situation.
Right. And I think it's important to point out that we don't, as brokers, want to add back like an SBA lender. You don't want to try to, find out what the SBA lenders add back and don't add back, and things might vary depending on the situation. But we should be adding things back as brokers, and because that's the way us brokers do it, and for a couple of reasons. One is, first of all, when we do our add backs, I'm conservative. I want to make sure that when we get under due diligence, that whatever I'm adding back can be proved during the due diligence phase. And if it's something that cannot get proved, or I don't think it's going to be easy to get proved, I won't add it back. I mean, it's not about trying to get the discretionary earnings as high as you possibly can. It's about getting the discretionary earnings, what the discretionary earnings really are, that can be provable during the due diligence process. But, I know when I give my information to Tammy that she's not going to accept all the add backs that I do as a broker. Just the banks can't do that. But also you got to remember, we're pricing our businesses off of how other brokers around the country are selling their businesses. So we're all working, operating the same way. And then the lenders, and Tammy's probably maybe not be using it herself, but when they get appraised, they're getting appraised the way bankers do their add back. So like peer comps, if you use peer comps, you better add back like a banker adds back, or you're going to inflate the value of that business too much. So my point in this, I'm getting off subject. If you're a broker, just do your add backs like a broker. It's good to know what things the bank's going to accept and not accept, but don't fight them over that. That's their way of doing it. That's how it is. So
yeah.
I probably beat that to the dead horse.
No, totally funny that you said that, because I often tell people I absolutely get meals and entertainment getting add back, but it's really challenging for an underwriter to piece together 12 months of Olive Garden receipts to get, $1,000 add back. We got to pick our battles sometimes, and that's one I tend not to fight.
Right. And I mean, if you're doing a loan for a couple $1 million, what's $1,000 add back for Olive Garden, restaurants and things like that?
Exactly.
So the business is all pre-qualified, and you send out a letter. It says, term, not a term sheet, but a sheet that's, gives the breakdown of what the terms would be, the basic terms would be on that SBA loan. And then, we're marketing that way, and then we get a buyer. And so my first question to you, I'm curious to know, when do most brokers send a buyer your way, and when do you prefer brokers to send the buyer your way?
I think it's really important to send buyers to get pre-qualified as well. We do both. We pre-qualify buyers and listings. And I think it's important for a lender, or to get a lender involved early on. Make recommendations to, doesn't have to be just one lender, give a few names, and let that person, or you can make introductions. I think it's really important to get buyers pre-qualified, not only for, just to make sure that they can obtain finance for peace of mind before you bring things to your seller, because I think that's important for, and I'm sure you would agree, a seller to know that this person is truly interested and can qualify for lending.
Yeah.
And so what we'll do is, if say you had a buyer, Jim, for your listing, you could send an email. I always say document the introduction, because as you know, we do pay referral fees. So we always want to make sure that, that introduction is documented. So when we do that, then I'll reach out to the buyer, and I'll have a conversation with him to see, what is his background? What is his resume? What would be the translatable experience to this particular business? Because that's important to an SBA lender and the SBA as a whole. They do require that you have some kind of management, supervisory experience, or prior business ownership experience. We'll also collect their last 3 years of personal tax returns, and we will ask them to complete a personal financial statement. So that will give us an accurate picture of their ability to put money down that is required for that particular listing and the purchase price. It also gives us a good idea of what collateral they'll be able to pledge on a personal level, and it gives us an idea of what their personal liabilities and assets are. So then we can back into sort of right away what their personal need would be, go back and plug it in and make sure that it would work. We also like to have those conversations with buyers up front about what their personal salary need is going to be, because as you and I just talked about, that can be important.
Yep. So when do you think most brokers are sending over? I'm curious about this. When do you think most brokers are sending over buyers? What stage of the process, or do you not know? Are they doing it before they send over the SIM, before a buyer seller call, or before a buyer seller face-to-face meeting, or before an offer, or after an offer?
Mm-hmm.
And I can tell you what I do, but I want to hear what you do.
Yeah. So the answer to that is it varies. It varies from broker to broker. Sometimes they don't get pulled in till the last minute, and unfortunately, it may not be something that works. So I always suggest early on, if you are talking to a buyer and you haven't even, I wouldn't wait till LOI stage. That's typically the stage where people are making the most introductions. But what I would suggest is that when you get a buyer that's interested, have them talk to a lender. Have you talked to a lender yet? Okay, well, let's get you in front of a lender. Let's get you pre-qualified, and then we can start going down the path. Because I can issue you a pre-qualification letter from the buy side that says, hey, I've looked at these things. They meet the qualifications in order to be able to obtain a loan. It's not a pre-approval, but it's a pre-qualification that says, yes, they meet the experience requirement. Yes, they have the means to put the 10% down, and that meets the basic requirements.
Yeah, for me, for a buyer, if you're working with a buyer and that's looking like, for another business to buy, but they don't have one picked out yet, but you're going to be helping them find a business, and they're going to need an SBA loan. Before you waste any time working with them, definitely get them to go to a bank and get pre-qualified. Mm-hmm. If it's a situation where you have the listing, or I'll tell you at least with me and how we do it, if it's my listing and a buyer's inquiring about that business, there's certain things that we make them do. We send them, get a personal financial net worth statement, an ID, a bio or resume, sign the confidentiality agreement, stuff like that. But from there, it could vary, to be honest with you. Ours usually happens before the first buyer-seller phone call, or at least before the first buyer-seller face-to-face meeting. And I don't know what people say, Tammy, but it can be, because they have to get you a lot of documentation. They're going to have a call with you. It's a lot of work. And I know as a broker, you might be saying, oh my gosh, well, I don't want to have a buyer do all this stuff up front. But you can tell the buyer, well, if you haven't already talked to an SBA lender, whether you're talking to me or any other broker out there, it's going to carry a lot more weight out there when you send them, hey, I'm interested in this business, and by the way, I've been pre-qualified for by a lender. And then what the lenders will do, they'll create a letter that says so and so has been pre-qualified up to X amount of dollars, 4 million, 5 million, whatever it is. And that letter carries weight as you're looking for businesses. So you can explain to the buyer that it's not a waste of time. Like, because I've had buyers say, well, I don't want to go through all that until I know more about your in particular business. And I'm like, you need an SBA loan no matter what you buy. So you might as well talk to a lender, and other brokers will take you more serious. Other sellers will take you more serious. So.
Mm-hmm. Yeah. I've had several situations too where, buyers, I can make it very simple and easy for them. It doesn't have to be, an interrogation by any means. Typically, it's about maybe a 20-minute phone call, walk them through the process just so they're aware. We talk about their background, and usually by the end of the call, and I ask for, six pieces of information, then they're pretty happy to provide that, because I do reiterate your point, Jim, that it really carries a lot of weight if they've got that pre-qualification letter. They'll get the information that they're looking for a lot quicker. They'll probably get a lot quicker responses from brokers about listings that they're interested in. So it really does carry weight.
Yeah. And at some point I want, before a buyer seller face-to-face meeting, I want that buyer to make sure that they've pre-qualified for this particular business, that they're looking at, not just in a general sense. Because you qualify on a general sense, will qualify up to X amount of dollars, but you may not qualify them on all. You're not going to qualify them on all businesses, just if they meet the experience. But which is great. I like seeing that letter. But before I start sucking a lot of my sellers' time away, because they're busy trying to run a business and deal with the process of selling the business, I want to make sure that buyer can get qualified for that particular business, especially if it's something that you're dealing with licensing and things like that. Mm-hmm. If it's an ice cream shop, maybe it's a different story. I've never done an ice cream shop SBA loan, but all right, maybe that wasn't the best example.
No, but you're absolutely right about the licensing, because, if there's an educational component to the buyer, they have that education experience. The licensing might only take 12 months, but if they don't have that, certain licenses can take 3 to 4 years. So you're absolutely right on that point.
All right, awesome. So I've gotten my business pre-qualified with you. The buyer, marketed the business, found a buyer. Buyer's been pre-qualified. The buyer, goes through everything. They love the business. They put an offer in. We go under contract, and at that point, they're giving you a call up. Where are we going from there, Tammy, on your end, from an SBA standpoint?
So I'll kind of walk through how I do it, but also explain that that's not everybody's process. So what we'll do from there is we've got the basics, right? We've got everything from the buy side, the tax returns. We've got everything from the sell side. We've got their tax returns, their accounts receivable, accounts payable, anything else that might go into it. Typically, if we've pre-qualified the listing from you and then we've pre-qualified the buyer, we have most everything we're going to need to do what we call a pre-flight with our credit team. So what we'll do at that point is we'll put the loan structure in front of the buyer and whoever is representing them and just say, okay, here's the loan structure that we've come up with, 10%, if you've got a seller note involved or no seller note, whatever that loan structure looks like. And everybody agrees that that works for them. Then what I'll do is I will put together an email to our credit team with some of our analysis and documents, and I'll send it up to our credit team to say, hey, this is a deal we're trying to do. Is this something that you would move forward with? And the reason that I do that is because at the end of the day, is the credit team is the one that's going to approve or deny the loan. So it doesn't make any sense to me to go all the way through the underwriting process to then get to a credit officer that might say, well, this isn't something we would do. So we would pre-flight that with our credit team. And typically we'll get an answer within 24 hours of, yes, we'd like this deal. Here's some questions we have, or no, we want nothing to do with this. And then we'll go ahead and issue a proposal. It's a 6-page proposal that basically outlines all of the collateral, all of the life insurance requirements, and basically the process. Some lenders just issue a simple term sheet, which is fine too. It will still outline the deal for you. We just like to get everything kind of up front for the buyer so that they know exactly what is going to be required. So our proposal letter is more like what the commitment letter will actually look like.
It's more detailed than a term sheet. It's more detailed than a term sheet. Yeah.
It is.
Which details are good? You're not catching anybody off guard.
Yeah. Personal collateral. On SBA loans, you will have to pledge any real estate owned. That could be primary residence and or investment property or commercial property. If you own it 100%, outside the state of Texas, the state of Texas does not allow you to take somebody's primary residence, but you can take secondary collateral. I think that is something that usually takes people off guard and is very important to know. That is an SBA requirement. If it says if there is equity available in your collateral, then it needs to be pledged as part of the loan.
But only if it's over a certain amount of equity, right? The home,
25%.
25%.
Yes. Has to have 25% equity in the home, and that makes it available in the SBA's mind. Mm-hmm.
Okay. And anything under 25%, it's not being asked to be collateralized, right?
Not necessarily, but I will put a caveat on there that any lending institution can ask for it, even though it's not necessarily required by the SBA. So some lending institutions might say, okay, it maybe doesn't have 25%, but we're going to call it an abundance of caution. Mm-hmm. The other thing that is really important to know is the life insurance. Life insurance is required on pretty much every deal. And it does take a long time to get that life insurance assignment if you have to get a new policy. So that's something I would always suggest that they get early on started, because that can hold up closings and can be very frustrating to buyer, seller, and brokers as well.
Brokers.
Mm-hmm. Yeah, I know.
So, the banks want that, and the SBA wants the life insurance in case the buyer that takes over the business and 2 weeks later, unfortunately, gets run over by a truck, that, the bank is the beneficiary of that life insurance policy. And those life insurance policies, they can take some time, because a lot of times, somebody has to come out and weigh you and take samples and, do all that stuff. It can take a long time to do that. So if you wait until like a week before closing to go out, the buyer's waiting until a week before closing to go out and get life insurance, you're going to have a problem. So
Yeah.
I agree,
Yeah.
Tammy. That should be done earlier in the process.
Mm-hmm.
Go ahead. I'm sorry.
No, you're fine. The proposal letter will also outline any guarantors on the loan. So you have to personally guarantee your SBA loan, anybody that owns 20% or more. That is also something that we discuss up front. I discuss all of these things up front on that buyer pre-qualification call as well. So they know these things, but then we also reiterate them in the proposal letter. And
anybody with 20% or more, what about a spouse?
So spouse will have to do a limited guarantee if they own the real estate based on that collateral pledge.
Okay.
And then, of course, if a spouse is going to be part of the ownership, then even if it's just 1%, they will have to guarantee because the collective family owns 100%. So that's something that also sometimes comes out in the wash. So, when you're structuring deals, typically when we see, family members, it's, 50-50. But that's not always the case. They say, I want my wife to be, a 2% owner for tax purposes or whatever benefit that is.
Minority, yeah.
And then we have to let them know that, then we have to let them know they would have to sign as a guarantor because total collectively, they as a whole would own 100%.
But the spouse doesn't need to sign if they're not going to own any ownership in the building or in the building or the business.
That's correct. Mm-hmm.
Okay. So how long are we looking from the time? Oh, were you not done? I apologize, Tammy.
No. I think those are the majors. Yeah, those are the majors that usually people ask questions about for sure.
Okay. And then also credit score, like what kind of credit score are we looking at, the minimum?
Typically about a 650 to a 680 and higher. Mm-hmm.
Yeah. Okay.
There's always going to be exceptions.
And then no federal crimes or anything like that. No. And Yep. I mean, I did have an issue with a buyer that 30 years ago in college did something stupid and was on his record, and the bank and the SBA looked the other way. I mean, they take that stuff into consideration. So.
They do. They just require documentation for it. So one of the forms that you all will complete for an SBA loan is called a 1919 form. And that basically says, you're a U.S. citizen. It asks you if you've ever filed for bankruptcy, have you ever committed a crime or you have a felony. Now, what I will caution you on is this is what we hear a lot. The question is, have you ever? Not was it expunged or was it 10 years ago? So people get a little bit tripped up by that question, not because they're trying to be dishonest, but, you hear a lot of people say, oh, well, I filed bankruptcy 15 years ago and it doesn't even show up anymore. And I completely understand that. But the question is, have you ever? So don't get tripped up by that question. And there's nothing wrong with answering yes to it. It doesn't mean you're disqualified from the loan at all. And the same thing with a felony. If you had one and it was expunged, not a problem. We just need some documentation on that.
But you gotta be honest about that stuff because it does come out, and it's better to be. And what Tammy's doing is she's not trying to disqualify the buyer from being able to buy the business. She just needs to know what she's looking at, and if there is a problem, there is a arrest that took place. What was it? When did it happen? Blah 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 blah. And maybe it's not going to be a big deal moving forward. Even a bankruptcy, you can move forward with that if enough time's gone by and you've established credit and da da da. Just be honest tell your buyers to be honest on the form. So you said something. I have to point this out because I've been asked this. I get asked this question probably every 6 months. Mm-hmm. I get somebody from another country that's like, yeah, can I do an SBA loan? I'm like, no, you can't. You're not a U.S. citizen. No, you can't. But you can if you're a whatchamacallit, right? If
you have a green card?
Green card, yeah. Or you're a permanent resident?
Mm-hmm. Yeah.
Okay. Yeah. But no, this is not open for people of other country from other countries. It's to boost. Yeah. So, all right. So how long does it take you from the time that, we go under contract and you start working towards the term sheet? What kind of time period are we looking at?
Yeah, so that's a great question. So when I have that buyer pre-qualification call, and a lot of times too, when I'm doing something for brokers as well, they'll want to kind of know, like, what's the timeline, what's the process. So once we issue the proposal letter, the buyer likes it, they sign it, they send it back. That typically, we'll send that DocuSign to make it very easy for them. So that typically happens pretty quickly. And then what we're going to do is we're going to actually underwrite the loan. So we have to collect a few additional documents that we didn't collect, during the pre-flight with credit, like bank statements to reconcile, those kinds of things. Nothing outstandingly crazy or anything like that. And once we get all of that, we'll assign it to an underwriter. Underwriting typically will take 5 to 7 business days, depending on their current loan volume of how many they're looking at. Usually not any longer than 7 days, as long as the underwriter and the borrower can connect and everything goes pretty smoothly. And then once the underwriter is done, he'll send it back to the credit officer. Now, this is, again, Live Oak's process. We'll send it back to the credit officer that originally looked at it and said it was okay to issue a proposal. And then they will review and make a final decision on the loan, and then we'll issue the final commitment letter. Now, that final commitment letter says your loan is approved based on these conditions. That commitment letter should pretty much mimic the proposal letter, unless there's been some other things that kind of came up that we needed to include. Then we send that to DocuSign as well, and then we sign the commitment letter. Once the commitment letter is signed, they send it back to us, and we assign a closer. A closing checklist is usually generated to the buyer and seller and brokers within 24 hours. We schedule what we call a huddle call to go over everything, and we set a tentative closing date. Right now, we at Live Oak are averaging about 42 calendar days to close. Sometimes it can take a little bit longer depending on how how everybody is working together. But that's the general timeline.
Okay. And then from the time that you start getting them to, the time that after they've been pre-qualified, but a time from contract to the term sheet or the letter, you're looking at like 2 weeks or so usually?
I would say as a rule. Mm-hmm.
As a rule. And then from term sheet to the commitment letter, we're looking at another week, 10 days?
Yes. I would say 10 calendar days. Yeah.
10 calendar days. And then from commitment letter to closing, we're looking at a couple weeks, right?
Yeah.
3 weeks.
Yeah. I would say about 45 days, depending on if we've ordered valuations and things like that. Mm-hmm.
45 days. So the whole process, how long is it taking you guys from the whole process from beginning to end?
I would maybe about 60 days, start to finish.
60 days. Okay. Mm-hmm. Okay. Yep, that's about right. Yeah, it takes me about 90 days to close on an SBA, a business with an SBA, because we got the due diligence and everything in there as well. And the thing is, and Tammy, you know this too. I mean, not everything runs smoothly. Like doing an SBA loan, there's a lot of information that the buyer's going to need to come up with, a lot of information the seller's going to need to come up with, and people have their lives. The seller's trying to run a business. They're trying to get stuff for due diligence as well. And the buyers, they're doing a lot on their end. So it's not like, the bank asks for something. It's a lot of the time is left up to how quickly the buyer and the seller are moving in the process. Mm-hmm. And I sometimes get, a buyer or seller that says, "Hey, we can get it done in, 60 days." And I'm like, yeah, that's if everybody's like dropping everything they do need to do at exact minute, and we're getting stuff as we get it. And it's not how things work. It'd be nice if it worked that way, but
yeah. Jim, I'm going to just love that you just said life happens right now, because I need to step away for a second to plug my laptop in before my battery dies. So give me a second.
Well, go ahead and do that. I'll keep everybody entertained. I'll dance while you're gone.
Tell a joke or something. I'll be right back.
All right. Sounds good. So that kind of stuff happens on Let's Chat. No big deal. Guys, seriously, Tammy Teece is a wealth of knowledge. She's just a fantastic SBA lender. And if you guys got buyers and sellers that you're dealing with or working with, and you're looking at an SBA situation, please feel free to reach out to Tammy. You'll see her contact information underneath her there. Okay. So welcome back, Tammy. That was very quick.
Thank you. Just a quick fix.
Hey, so once a term sheet or the letter is issued, what percentage of the deals close on average? And why do the ones that don't close, what usually is the reasons for that? And I'm sure there's a lot of reasons.
Yeah, I would say we have a pretty good ratio. I would say 95% of our deals are closing when we issue that initial proposal letter. Things that can trip things up are, much like we said, maybe, didn't answer the question right, and we find out later that you had a bankruptcy or something like that. Not a deal breaker, but, that could be a character issue. So that sometimes when we have to go through some of those things, that could be a potential harmful to the transaction issue. Maybe when the valuation doesn't come back high enough, that could trip up the transaction. Maybe, again, not a deal breaker, but we might have to restructure the loan if the valuation comes in a little bit lower. At that point, we've typically already looked at, credit and all of that stuff. So, the things that can trip up a transaction are really some of the reports or background information. But I think we've been really successful in trying to pivot from those and find solutions instead of just killing a deal. At that point, everybody's worked really hard, buyers, sellers, brokers, bankers, credit officers, and nobody wants to say no or, hurt somebody's dream at the last minute, but also don't want to put any of the buyer or seller in a predicament either. So
Right.
One of the big things that tends to come up last minute, so I'll encourage all of you to get on in front of this as brokers from the sell side and the buy side, is landlord waivers and lease assignments.
And subordination clauses.
Yeah, sometimes we get those last minute. And depending on who the landlord is, if it's, a big strip mall or something like that, there's a lot of language they want to change and the attorneys are going back and forth and it can push closings out. We try to be as flexible as we can and still meet the SBA requirements on those types of things. But if you can get that lease assignment sooner rather than later in the closing process, we can get in front of those things pretty quickly.
Yeah. My feeling is you try to get the landlord involved earlier than later. I know that a lot of brokers would say no to that, but landlords are one of those things that kill deals, so you want to flush that stuff out immediately. And
they at least can postpone them. That's for sure.
Yeah, they can. We did a transaction last year, Tammy, that it was a chain of hair salons and there was 12 leases. And it was, oh my gosh, really, the most I had ever done before that was 6 leases in one transaction. And this one had 12 leases in one transaction, and trying to coordinate with 12 different landlords and 12 different attorneys. And gosh, it was tough. It's a lot of work.
I bet you needed a vacation after that.
I need a lot of drinks after that, Tammy.
I know.
So that's
like
good.
Idea.
So you're all done. And what does a day of closing look like?
Well, it looks like we killed a lot of trees. But the good news.
It took me a second to get that. That's funny. Let's start. I want to stop right there. How many pages is it in the range? I just see a stacks, but how many pages is it approximately?
Well, it depends on the complexity of the transaction, because you've got, the mortgage documents, you've got your buy-sell agreements that need to be signed, the seller needs to sign stuff, and then you've got your SBA documents and then the bank's documents. So some of the documents are somewhat repetitive, but, it is what it is. So don't be intimidated. Not all of them need to be signed. But I would bring your good pen that won't run out of ink.
Yeah, it's pretty thick, but I mean it's like getting a mortgage for a home. I mean those packets can be pretty big too. It's just you know?
Yeah.
Yeah, it's not like you can negotiate any in that ways. So I'm going to let you off the hook. I'm not going to make you answer that question. So, you know, we're living in 2023, 2024 right now. I'm doing my closings virtually now. I haven't sat around a closing table I think I've sat on a closing table once in the last couple of years. And I'm telling you, my buyers and sellers like it too, by the way. So, you know, what does a virtual closing look like for you, Tammy, for the brokers that are out there doing that? Because you do need wet signature on some of the pages, right? For the buyer.
Yeah, we actually will send a mobile notary to anyone. I've done closings in Texas and Colorado, and you know, so we just go ahead and we use a lot of attorneys here in Florida. One of my favorite attorneys is Max over at Fogel Law, and so I try to use them as often as I can, just because we know how each other works, and you know, if we have to send a mobile notary to the customer, that's what we'll do. And the customers seem to think that's a little bit easier because they sometimes have questions, but we're always available virtually to them. Because as you know, our headquarters is in Wilmington and I'm in Florida. So I haven't actually sat around a closing table in a very long time myself. But the attorneys are all very, available, virtually as well. So there's a ton of support during the closing process. What we like to do too is send the documents to the buyer's attorney and the buyer and the seller when needed prior to actual signing. So they have time to look at them, review them, and ask any questions.
Yeah. And then, you know, then the day of close after they reviewed them, if it is going to be virtual, some of the documents, are they being sent by DocuSign? And then the other ones they're going to be printed out, signed, everything is going to get scanned back, emailed to the lender or to the attorney that's involved. And then the wet signature pages are then put into FedExed overnight. So they get an electronic version and then they're getting FedEx the version.
Yep.
Is that right?
Absolutely.
Okay.
That is correct. Yeah. And typically if the signing is in the morning, we have time to review all of the signatures and be able to fund in the afternoon, send that wire out in the afternoon. But keep in mind that if we're not signing to the afternoon because there's wire cutoff dates and stuff, the funds might not actually go out until the following morning so that we can review everything.
Okay. Is there anything else about the closing you think that brokers should know or that we could make us better for the SBA process?
If you do attend a closing, always bring champagne. It is a wonderful moment for your buyers and sellers to celebrate, and you too. It's a process, but you know, at the end of the day, you guys are making people's dreams come true. So celebrate.
That's fantastic. I like that. Tammy, I really appreciate you coming on today, taking time out of your busy day. Thank you so much.
Of course, it's always a pleasure. I love chatting with you.
Hey, thanks everybody out there for watching this. If you're getting any information out of it at all, if you don't mind doing me a favor, if you can like the video, if you could comment on the video, and definitely subscribe to the video, that would definitely help out. I'm not getting paid for this in any way. It's just using it in my own time. I enjoy doing this. I really do. But I would like to grow my YouTube channel a little bit. So if you don't mind doing that, it'd be great. Plus you get to see the videos. But I appreciate you guys tuning in. And until next time, have a great day.